de los análisis, porque como saben tenemos panel de expertos para ir intercambiando impresiones sobre estas respuestas que está lanzando Jerome Powell. Y ahora pasamos a la entrevista internacional con Edward Moya, es Market Analyst en Marketpulse and Oanda. Edward, thank you so much for having us a few minutes.
Always a pleasure to be on. Thank you.
Edward, this is the Powell's second day in his Senate appearance. It seems that he has softened its words, the message, a bit regarding yesterday's responses. Do you think that?
Well, I think the Fed is going to remain data dependent, and right now, this morning we got another round of economic data. I know a lot of people ignore ADP, but private payrolls came in higher than expected. The JOLTS job openings were really pretty strong. I mean, yes, they're coming down, but this labor market's too tight. Wage pressures are not easing anytime soon, and I think the Fed is looking ahead. There's a non-farm payroll report. There's a CPI reading that we get on Tuesday, and there's good, I think, arguments that you're going to need to see much more aggressive action. So I think the markets are slowly starting to price in more aggressive rate hikes, and this is, I think, really going to raise concerns about what's the outlook for the economy. And I think we're probably going to be recession bound, and I think the risks of the Fed doing over tightening is probably growing for a lot of investors.
Edward, it seems that since yesterday markets started to price in the probability of a 50 basis points hike in March in 2 weeks. Do you see that? Are you agree with the market?
I anticipate that the Fed, now that they've kind of positioned themselves, they're going to be data dependent. I think you're probably going to get a strong non-farm payroll report this Friday, and I'm not anticipating disinflation trends to return on Tuesday. So I think the argument is going to be there for a half-point rate increase. I think the risks of the peak rate going to 6% are growing, and that's scaring a lot of investors. So I think the Fed now, I was arguing last time that they should have kept the rate hiking pace at a half point, and now they're going to have to increase it from 25 to 50. And I think this is a Fed that is, I think, really losing some effectiveness. I think you would rather be aggressive from the start, and now the Fed's playing catch up, and this is definitely unnerving a lot of investors.
So interesting. Edward, Powell argues that he can raise interest rates without significantly raising the unemployment rate. What do you think? Because we are waiting for the next employment data this Friday.
Well, I think the Fed can remain in tightening mode for quite some time. The unemployment rate is extremely low. The Fed can, for the most part, continue to deliver rate hikes until we see a 0.5 percentage increase in the unemployment rate, which would take us to 3.9%. So we're really seeing signs that this labor market is very strong. And I think what's going to really concern the Fed is you have parts like construction, some manufacturing that are in a recession, and in time those parts are going to be rebounding, and that might be when you're really starting to struggle for inflation to get to its target. So the Fed needs to be very aggressive, and I think they've missed an opportunity over the last couple of months, and I think you're going to see that the Fed needs to really make sure that the market does not fear that the Fed's going to have to pause and restart hiking. I think really we want to see all the rate hikes done, trigger a recession, have a slow patch, and then possibly see easing at some point next year. But right now that playbook is kind of up in the air.
Jerome Powell has just spoken a few minutes ago about the strength of the dollar as a reference currency in the international trade, because he has been asked about Russia and China's commitment to the yuan. How do you see that? What do you think about this strengthen?
Well, I think there's been a lot of press coverage, and I think the BRIC nations, they are working on some alternative solutions. I think their currencies have been battered, and they need to try to find better funding options. And I think will the dollar's dominance start to ease over the next few decades, probably. But right now, still, the dollar is the world's reserve currency. You're probably not going to see, I think, a major switch just yet. But I think this is an important theme to watch going forward. But right now, I think you're probably seeing a lot of investors. They're focused on short term. You're going to see the dollar possibly have some strong momentum here. But I think everyone. The playbook for a lot of currency traders is that you're going to see I think a strong outperformance with emerging markets, China, going forward, and then eventually Europe will probably come in second, and then the U.S. is going to lag. So there's going to be a major, I think, moment for the dollar to weaken. But right now, as we're still pricing in more rate hikes by the Fed, that's going to be rather dollar supportive.
Edward Moya, thank you so much for having us. A pleasure as always.
Thank you.
Y nosotros seguimos